The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 61. You get the Nasdaq off 19. S&Ps are off 7. Gold contracts down $7.40 at 13.06. And we get some volume, man. We've already got 225,000 contracts in the gold contract. So we are going to get explosive volume out here today. That is really unusual at 10 o'clock in the morning. I'm telling you. It's, 225 all day is not bad. 350 is big. Let's just say we're going to do something like 4 or 5. So volatility is going to be out here all day long. Silver's down 10 cents, $16.31. Light sweet crude off 85 cents, $69.88. We're going to have numbers after the close.
Yeah, that's not the big number, though,
no,
right?
2 o'clock.
We'll find out what's going on with that Iran deal. That's when it's scheduled for 2, but we know it's not like the EIA we're just talking about. You might get a delayed press conference. It might take some time before you actually find out what's going on. But sometime this afternoon, we're going to find out something. Who knows what?
A lot of trades around it, baby.
That's right.
Notes and bonds. You get the 10-year note right now down 8 ticks, 119.14. 30-year bond off a half a point, 143.03. And King Dollar. King Dollar is going for that December 27th. Swing high. We're up 528, 93, 120. Euros at 118.43 to 1 US dollar. Yen is at 109 and a quarter to 1 US dollar. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. Every trading day right here, folks, 11 to 12 Eastern Standard Time. You want to understand the option market upside down, defined risk, futures. Check it out, 11 to 12. You can do it right at TFNN. Go to YouTube, just put TFNN in the search bar. And, of course, if you haven't test drove the platform, it's an outstanding platform. The way you do that, you come to our website at TFNN. Just hit the TD Ameritrade banner, bring it up. It's an outstanding platform. They'll let you trade with paper money. Kevin and his team, they'll walk you through all these defined option strategies that they go through each and every day. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. How you guys doing?
Morning, Kevin.
Well, we're doing good, and I'm glad that spring finally came into Chicago. You guys have had
miracles do exist, didn't they?
They do. The first baseball game of the season Saturday when the Cubs play the White Sox. So that'll be my first outdoor baseball game. I refuse to go unless it's at least in the 70s.
That is so cool, man.
We don't blame you. We're in Florida, Kevin.
Listen to who I'm talking to.
Right, exactly.
I'm telling you. So, market-wise, right? We've got basically we got markets moving around. I mean, I guess we can, the oil market's pretty amazing, right? I mean, it's like you get
incredible.
It really is, man. I mean,
the amount of geopolitical risk that is in this oil market right now, Tom, is I think it's the most I've seen in years.
Yeah, there's no doubt.
The question that I think people are asking right now is, what can Trump say to make oil go up $2? What can he say to make oil go down $2? And trying to figure out what that is exactly, right? Because
so check this out.
Oil's going to move.
It's so true. So in my newsletter this morning, and this is really unusual when I do something like this, I said, hey, listen, at 2 o'clock, as far as I know, as far as I'm concerned, commodities are going to move. I just don't know where they're going to move, man. Sure. And the dollar, you know what I'm saying? Because, like, they're all, they've been trending good. I mean, the bottom line, you get gold going down, we get the dollar going up, you got oil going up. The softs have been going up, too. So it's like, okay, man, what's incredible about it, I guess about the oil, Kevin, is that the dollar's been going up and oil's been going up.
Right.
So it's like, what would happen if the dollar was flat? Like, we'd have $100 oil, man.
Exactly right. I mean, Tom, we talk about it all the time, how the macroeconomic, which means the higher U.S. dollar, should be a headwind for any commodity.
Right.
And for some it's been. You can see what it's doing to gold.
The metal,
right
yeah,
now.
absolutely.
However, that can always be trumped by a microeconomic story, which in this case is the geopolitical risk affecting the crude oil market right now. So absolutely right. Just like in the summer months, Tom, weather can take over the grain markets, right? And it doesn't matter what the dollar's doing or what anything else is doing. Weather takes over those markets. So that's what you see. But right now in crude oil, it is the microeconomic story. So it wouldn't surprise me if we get a move coming out of this, and it may not matter what the inventory numbers are Tuesday, this afternoon and tomorrow morning. If we get a bigger microeconomic story, we're moving in that direction.
Yeah, no, I can see
I would agree. I mean, the numbers are always important, but they're nothing like how important it would be if, we fell out of the Iran deal, and then if Iran wants a nuke, and Saudi Arabia wants a nuke too, and, it just things escalate, and I could see that shaping the supply and demand more so than the API tonight or the EIA tomorrow. Yeah.
Hey, folks, that's why we're in this business. There's a lot of moving parts.
Speculation.
Right?
But Tom, how surprised are you, in all honesty, that this dollar has managed to stay as above 93 in the $ DXY and above 93 in the /DX? How surprised are you by this move above the dollar?
Yeah, no, my take is that we wanted to kind of test this area, do you know what I mean? Yeah. But there's no doubt this has been a fast and furious move, even though the dollar's been down dramatically the last year and a half, because this has been a straight line move. This is a straight line move.
It's the last like 2 to 3 weeks, basically.
Huge,
just rocket ship.
Huge. Yeah. And if you look at the European markets, I mean, that's why they're up, because basically it's cheaper to buy the European markets because the euro's down so dramatically.
Yeah, and that in itself is a headwind for U.S. stocks, right? U.S. multinationals don't do as well with a higher U.S. dollar. So between crude oil going up, could it be affecting overall expenses for companies, and then the higher dollar? Not really surprising that we're in kind of a choppy trade here. Even though earnings are blowing the doors off of these expectations. So pretty interesting market we have going on here.
No, it is, and what Kevin's saying, folks, and this is really cool. So you get trending markets, you get choppy markets, you consolidated markets. You get markets like this that, okay, what's going on, man? Do you know what I mean? Sure. And that's where we're at right now. That's exactly, it's like, okay, man, talk to me. Do you know what I mean? Talk to me. You had Jamie Dimon coming out this morning, nailing the, he's saying a 4%, 10-year.
Yeah.
And it's like, when I hear that, bankers absolutely know a lot more than me about structure, okay?
Jamie Dimon specifically,
yeah.
Right? Yeah.
But that being said, is he talking his book, too?
Sure, no.
But if I learned anything, I was close to a banker a long time ago, and I remember he was just doing me a favor, but if they really feel that, they see the flow, Kevin, just like you were on the floor. They see the flow.
Exactly.
You know what I mean? They know what that flow is, meaning the buys and sells coming in.
Yes.
Well,
just think in terms of why is it a cliche, Tom, that we say don't fade the Fed?
Right.
The Fed is doing two things that we know for sure. They are normalizing interest rates, and they are reducing their balance sheet. Right there, that puts downward pressure on bond futures and upward pressure on yields. And just like when they were doing the other side, they took rates down to extremely historic low levels. The fact that what they're doing right now, what the Fed's doing, is the exact opposite of that.
Yeah, no doubt, no doubt. Folks, right here, 45 minutes, great program, and of course, there's going to be lots of volatility, and as we're at the spring, and you're going to be hearing Kevin talking, when you're putting these strategies on, you're going to be careful in the summer. You know what I mean? He's going to basically teach you what you're going to be looking for with these strategies, because some of things slow down, man. Cooking, brother.
Thanks for having me on, guys.
Tommy and I, we look forward to the show at 45 minutes, Kevin. Have a great one. Have a safe one. Stay right there, folks. Tommy and I are coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow right now down 55. You get the Nasdaq off 16. S&Ps are off 6.5. Oil. Now, this is going to get really intriguing today because we love doing these volatility trades inside the oil market. Bottom line is that you get a double banger for tomorrow morning, right? No, what day's today?
Today's Tuesday. What are we talking about? Okay,
that's
let's
right.
back it up. Let's back it up. We're going to start this over.
Oil comes out after the close.
Okay, let's clarify. API you're talking about is after the close on Tuesdays.
Yeah, but at 2 o'clock
the bigger number
today
is the EIA, usually on Wednesdays at 10:30.
Right.
But what we're going to look at right now, so we'll start this all over, okay?
Yeah, no, that's right. Because
I'm even confused here. Where's the double banger? Because even if it was,
I got it. Okay, so what we're talking about is the 2 o'clock announcement today. So oil doesn't close at 2:30. Right?
Yes.
So we're going to go over to the Nadex platform and take a look and see where these, because normally we do the volatility trade on a Wednesday, but we'll see how these babies line up at 2 o'clock.
So let's jump over to Nadex. I wanted to take a look at some of the oil trades that are going on over here. So at 2 o'clock today, you have President Trump. He's going to talk about whether he is going to back out of the Iran deal, right? Now, it's scheduled for 2 p.m. Eastern time today. Now, one of the variables you're going to be dealing with is that's not like an EIA number that's going to come out at exactly 10:30 that you can rely on it.
Right.
A press conference is scheduled. The announcement was scheduled for 2. That could begin at 2:15. It could begin at 3 o'clock, right?
Right.
It could begin at 2 o'clock, and nothing could be said substantially relevant until 2:30, right? I mean, just in terms of who's speaking, who's introducing.
Right.
Everybody needs to be seated. The cameras need to be ready. But let's take a look, because in all likelihood, we will get some news prior to 2:30, with it being 2 o'clock. But that's just one of the variables of many you're dealing with. So let me just close out some of these screens. We'll pull up our oil contract specifically. We'll get it nice and clean for everybody. So here's your oil contract. We're looking at the June contract, currently trading $69.87.
And you've already had a lot of movement, which is pretty cool.
Yeah, up and down. I mean, it's surprising that we're below where we were yesterday with this news coming. You know, I just thought, you know, to have that slide overnight, yesterday at about 3 o'clock, we slid from about $70.80 all the way down to pretty remarkable, under $69.60. You're talking about a $1.20 move yesterday afternoon. And so right now we're sitting just under $70. So Nadex has a variety of spreads, right? They have ones that are going to expire at 11. They have ones that are going to expire at 12. There's going to be another ones put on the board that go from 11 until 1.
Okay.
But what we want to look at are the daily ones that go till 2:30.
Right.
Okay. And so we're going to start off with the daily ones that are introduced at 8 a.m. Now, these are $3 spreads, okay? Now, these dailies that are introduced last night are $5 spreads. So I just want to kind of compare the two. I was looking at these this morning, and there's very little difference because they're going to be a very similar price, as in the 8s till 2:30s. They're going to go from 70 to 73. That would be our bullish spread.
Yeah.
We're about 10 cents out of the money, which is nice.
Yeah, it's close.
And this would be our bearish spread, right? Going $70 down to 67. Same $3, okay? But what I want to compare it to is then we jump to the 2:30s for the daily, essentially, and these are $5 spreads with the same exact price beginning. Now, what's interesting here is, right, check it out. So the 70 to 75 is the same exact price as the 70 to 73.
Look at that.
On a day like today, you could see more than $3 of movement, okay? Now that's slightly out of the money, and let's just compare and see how this lines up and if they're identical or not. And so they are. So again,
that is amazing.
You're looking at the $3 spread and the $5 spread, identical bid offers. So this is where you want to get used to things, because right away, what are we going to do? We're going to close out these $3 spreads because they're not even worth looking at when you can
same money
give provide yourself with $5 of potential profit. So this would be your bullish spread. You're about 16 cents out of the money. You'd be buying it, and this is your bearish spread. You're going to have 16, now 18 cents of intrinsic value, and that's going to be the difference. This one's going to be about $18 more expensive, 16. So you're looking at $65, $74 total, right? So you would need 74 cents total away from $70. It's called 75 cents. So you're going to need either $69.25 becomes your break even, or $70.75 becomes your break even, and you have until 2:30.
Pretty cool.
So you can trade these out prior, right? I mean, let's say you're looking for, let's say your bias is you think oil's going to pop.
Right.
You think maybe President Trump's going to pull out of the agreement, the market's going to react, say, oh no, oil price is going higher. So that would be kind of your bias. Well, then what if you get some huge movement prior to the move downward? Maybe you take that position off, right? Because you're really looking for the news to pop. As in, you can trade these out. You know, this is your bearish spread currently. Right now, it's great that they're ticking by 1 penny in between the bid offer, right? I mean, talk about the ability to trade them. You know, you could buy that back, and you'd be getting $44. Well, if this spikes lower prior to that news, and we've been getting some action. I mean, we were just up at the market open at $70.30. We've moved almost 50 cents in the last hour. So that could always have some volatility even prior to the news coming out.
And you know what would be wild is that, you know, Kevin was talking about the politics inside the oil market right now. If, in fact, he came out and says, okay, I'm going to give it another 30 days, something extended, it would shock the market. It'd be,
and I was going to bring that up, but I don't know if he can say that. That's where
he can say anything he wants, right?
Well, no. There's a May 12th deadline. That's why this is coming. So it's not like there's more to go. It's not just a regular announcement that he can say it's gonna. We're gonna wait. We're gonna wait. He needs to either you know, reaffirm or whatever. You know,
because he reaffirmed it 6 months ago. Exactly.
There's not quite. It might be. There's not quite that ability to just freelance and say I don't like it, but we're going to give it 2 more months to see what they can do. I don't know what kind of limitations are there.
Well, if it gives it 6 more months, that oil market could get hit pretty quick. You know,
to the downside, right?
Yeah, exactly.
Because that would basically, 6 months. That's saying we're not going to do anything currently. We're going to stay in the agreement for all foreseeable. That's how the market would consider it. And look at how oil is continuing to pull back. So what's nice is this trade lines up particularly well when the price is near $70, right?
Right.
Because as we've just gone down about 16 pennies since we've been looking at this, and what's happening as this happens is you're gaining intrinsic value on the bearish spread. So the bearish spread's becoming more expensive. and now you're up to $78. So you're still paying a similar amount of premium to the upside because we're somewhat there, but the intrinsic value is getting added to the bearish spread as this continues to decline. So it's ideal when you're looking for a volatility trade when it's right at the point, which would be $70, your pivot point, kind of where you have upside and downside potential, because you're paying no intrinsic value on either side, which is nice for your upfront investment. But still, pretty close. And
that's a lot of movement so far.
And you got 4 hours of trading activity. And as we can see, even without the news, we're getting upward and downward moves throughout the day in crude. And 2 p.m. today, we're supposed to get it. Now, like I stated, the one variable, and there's many variables, is that you might not get the announcement by 2:30. Right. You only have a half hour. We know how press conferences work in the government, right? Yep. And especially, I imagine that President Trump's going to want everybody to be watching, you know, and so maybe he lets the crowd build until 2:15, you know, because he knows everyone's tuned in at 2 o'clock. Why not make sure everybody's really tuned in at 2:15? Just things to consider.
I was actually surprised that it was even not just the oil market, just in market hours in general, because, you know, we'll see, and nothing seems to affect this market anyway. Sure. But you know, it's going to be a big announcement.
It's a guaranteed audience when it's during the market hours.
Oh
right?
yeah,
that's right, for sure.
No doubt.
Yeah.
Stay right there, folks. So Tommy and I are coming right back. Our phone number is 877-927-6648. We have the Dow Industrials down 15, Nasdaq's off 17, S&P's off 6.5. Come right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials right now down 50. You get the Nasdaq off 17. S&Ps are off 6.5. Let's go take a look at some of the higher volume stocks. Not that we have volume in this market. We get, let's see what happened with GE. GE's got a bid that's up 41 cents. You get Comcast down $1.20. Hertz is getting smoked. That's down 280. We'll go back to Hertz for a second. You got Citigroup up $1.80. Let's see. So let's see what's happening with good old GE first. So GE's up 40 cents. Let's see what they're just buying it or they got something to say. GE announces broadest portfolio new product releases. Not much. Hertz, HTZ. This is pretty intense. This is they're doing something wrong.
Well, they're doing something wrong in that they don't have a stake in Uber, probably.
Yeah.
I mean, see, right? It's,
seriously.
You know, there's
look at that chart.
Yeah.
$125.
I mean, the writing was on the wall in terms of, I mean, you know yourself, you're a Hertz customer, but
yep.
You love Uber, and I'm sure it's hit you in some capacity. I mean, I'm going to be back in Boston this coming weekend. I have no plans to rent a car because, number one, I can maybe use my family's car, but number two, Uber's there whenever I need it.
No.
So it's a direct competitor, right?
So you know what happened last weekend, right? I fly in, and I was telling the story in the afternoon show yesterday. This blew my mind, folks. So picture, I flew in, and I wanted to go to Regina's first before I went and saw everyone, right?
Sure.
And I'm going there, and I realized that, oh, no, there's a hockey game, right?
Okay.
But I had already gone through the tunnel, and I'm going to the North End. Well, I get in the North End in downtown Boston, and there's no traffic, and it's Friday at 5:30 at night. I'm saying to myself, this is really strange. And then I start thinking, I says, you know what? The traffic probably got so big that everyone downtown is just taking Uber, and that's it.
Sure.
And make a long story short, I get back out, get the expressway, and what the difference was is that now in the suburbs, right, when I was going to Quincy, the traffic was extraordinary, right? Okay. And when I saw all our cousins, that's what they said. They says no one takes their car downtown anymore. They're either they take the T down, right? And then when you're down, they Uber everywhere.
Sure.
And you could see the difference.
Oh, for sure.
It was amazing.
I believe it.
Yeah, it was like.
So to be in the rental car business right now is a tough deal.
It is.
Because you're competing with the likes of Uber.
Right.
And when you factor in, I mean, if you're paying $80 or $100 a day for a rental car, that's a lot of Uber trips, man. Everybody knows.
And you're paying for your gas.
Right. No, exactly. You know, the costs that go into that, let alone if you get into an accident, right? I mean, that cost is, you know, what's there, a 1 in 200 chance you get into an accident? Well, if it costs you a couple of grand, that's still, you know, exactly. It's
No doubt. And what's intriguing, you know, I did this last night, Tom, and I feel the exact same way. And then I brought up Avis, and I'm saying, man, what are they doing right? Now, they get a whole different chart, man. This is like so weird. You know, it's like, okay.
Well, maybe it's the type of deal where, I mean, Hertz is expensive, man. I have never rented with Hertz.
Okay, right.
It is a premium brand.
Right.
And so maybe that's where, you know, it's just not worth it for people to pay for a premium, you know, it's, the car will be waiting for you, you know, all those Hertz commercials. Well, it's not worth paying for. They're not worth the premium that you know, versus a budget rental car. Yeah. You have to compete on price when you're trying to compete with Uber.
Yeah.
Taxi companies learn that, right?
I don't know, but maybe they own a piece of one of these, you know, because they have those car sharing services outside of Uber, too.
Sure.
Do you know what I'm saying?
Sure,
and maybe Hertz has a piece of that or something. But I was really surprised the difference. Because way to see the difference also in price, folks. This is pretty wild. Meaning that how Avis is growing versus Hertz. So 2014, 8.5 billion, 2018, 9.3.
And they're ticking up they're growing for sure. Every year it looks like, too.
Yeah, wait till you see this. This is like a disaster. On Hertz, you have just the opposite. 11 billion, 8.9.
Yep.
Pretty wild, right?
Yeah.
Yeah. So we'll see where the rest of this is going to shake out, but
and maybe that factors into. I mean, maybe Hertz operates off of a lot of corporate accounts or something like that. I mean, it would make sense if you're a premium, if you're willing to pay premium rates. You know, you're probably playing it with a corporate credit card or something like that. Maybe that's where companies have just wisened up and said, we're not paying $200 a rental car for 3 days. That's $600. Well, guess what? $600. You can take an Uber black car anywhere you want in the city for, you know, and they've just
you're not paying for parking.
Right. Everything. I mean, companies just, I could see that. You know, companies saying, no, we're not paying for that, you know, Hertz Gold membership for you, you know, for those constant travelers, that type of deal.
I can see that, no doubt. Let's go over to that bond market for a second. So you have the this morning, Jamie Dimon come out, you know, and people have been coming out for a long period of time saying that, yeah, rates are going up, the 10-year. Now, this is pretty dramatic what his statement was. His statement was that it's going to 4%. That is one big number. Let me see if I can find this thing because, you know.
I was just going to say, probably if you search J.P. Morgan, JPM.
Yeah, JPM. On Bloomberg, yeah, there it is, right there.
That's only 10:30, so that's like a couple minutes ago. Got ticked down once for 8 this morning. There we go. Diamond says, there we go.
So J.P. Morgan says it's possible U.S. growth and inflation prove fast enough to prompt the Fed to raise rates more than many anticipate, and it would be wise to prepare for a benchmark yield to climb to 4%. That'd be a 33% rise from where we are right now.
Sure.
Which is pretty intense.
Yeah, when you start talking about in percentages movement, when you're coming off like 0%, right? For sure.
Right. You know. So we'll see where that shakes. You know, and as I said a little bit earlier when we were talking, it's like, okay, you got to pay attention to it, folks, because you know if he's seeing a flow, so far the flow that is still out here, in my take, is that we still have more buyers than sellers, and we're going to be able to tell even this week and next week, because what has happened is that these auctions that are coming out, here it is right now, the first of 3 auction this week. They're going to auction $31 billion in 3-year notes. Now, followed by a 10-year and a 30-year sale Wednesday and Thursday. So the next couple of days we're going to know, because what the market's going to be looking for is that how many dollars are chasing those. Is it 2-to-1 demand versus supply, or 3-to-1? You know, and that's what they look for as to how many buyers do we have versus sellers.
Sure.
If you only have like 1.5 to 1, that would be like problems in paradise. That would be considered a failure. On the auction, you know, even though they'd sell it, it'd be like, hold it, man. You know, we better be careful here. What Mnuchin has done, which is pretty smart actually, is that he's going to come out with new 2-month notes.
Okay.
And there was an article yesterday, and this was pretty cool. All this bread that the corporations are bringing back, folks. You know, some of them are basically, you know, buying their stock back. A lot of them don't know what to do with it yet, so they're putting it in money markets. Now, he must have saw that and said, hold it, we can get it into treasuries for 2 months until they decide what to do. Now, if that's the case, that's still going to keep demand inside the note market if, in fact, you know, you're a CFO, you're bringing the money back, you're not quite sure, like, okay, what do I want to do with it?
Yeah.
You know, so we'll see where that money's getting parked. But, you know, as we just even talked about markets, that inside that bond market, man, there's so many moving parts right now.
Yes, definitely.
At 2 o'clock, I suspect there's going to be more. And at the dollar was up 500. We're up 463 right now. Stay right there, folks. Tommy and I are coming right back. We have the Dow just 1 positive, up 2. Nasdaq down 2. S&P's basically down 2. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to Options Expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the Dow right now down 7, Nasdaq off 4, S&P's off 2.5. And so what's going to get interesting here, folks, at the 2 o'clock time frame is that when we get the news of what we're doing, if we look at Boeing, Boeing has got a huge order from Iran, well, letters of intent.
Yes.
But they're so busy, Boeing's so busy, is that they haven't put some of it on their books yet,
yeah,
right?
Yeah, majority of it just because they have such a backlog that
right.
I don't think they can put it on. But so to dig into it, so a U.S. withdrawal from the nuclear agreement with Iran, which is the 2 p.m. announcement, would cost Boeing aircraft deliveries, though the effect would be minimized by the current backlog of 737. So we'll keep track. You have the 737 and you have the 777.
Right.
The 737 is the one that they can't even come close to producing, I guess, their orders. They have a huge backlog. So a pullout would likely cede market share to Airbus, while the C-Series could gain, as it seems ideally suited for the market. So what it digs into here is that Boeing would see little effect, and that's mainly because the Iranian airlines have 140 aircraft under letter of intent, of which 100 are the 737 MAX airplanes, and those are the ones with a huge backlog, which are not on their books yet. 30 are the 777s, though, which will affect it. Yeah, and so as we dig into here, it says Boeing's large backlog of 737s means the loss wouldn't affect its production rates. The 777 is a different story, though, as the output is low at effective 3.5 a month, and the order book for the current version is just enough to sustain that until the new 777 comes online. So, yeah, you could see some fluctuations in Boeing as that news comes out. So Airbus, regardless, Airbus is likely to take greater market share in Iran over the long run, regardless of U.S. public policy. Europeans have built a strong relationship with the Iranian government and were quick to enter the market upon the lifting of the sanctions, whereas obviously our rhetoric is a little bit different in the U.S.
Yeah, and let's just look at this, because we know that, so we've had a couple tests of those high volume lows, but we still got they still got 5 high volume lows here. So you're still in a consolidation, and No, it's close. You know, the top 347 is not bad, but you're still in the consolidation, 311. Let me just go to General Dynamics, because these defense contractors that get killed. Yeah, see, General Dynamics never came back. That's under the February lows, big time. 203 is the lows. NOC, Northrop Grumman, it's making some kind of a counter trend bounce, and Raytheon. Raytheon's going to looks like it's setting up a big ABC down. It came off the highs of 229. You go to 196. You can see this already today. It's there's going to be a lot more movement in these stocks. So, pretty wild, man.
Let's check back on oil and see how we're trading as we approach that 230. So kind of right where we're hanging at, 69.72. When we were looking at that example, we're up there at 69.82, something like that. So we'll see. Pretty interesting action in terms of, you know, if you said yesterday, when we're trading it, you know, yesterday afternoon, call it $70.50 for most of the day, right?
Yeah.
Even Sunday night, we're above $70. The low was approaching $70. That's early. That's 9:30 on the open yesterday. If you had said yesterday, now the news came out that Trump was going to make that announcement.
Intraday yesterday, yeah.
And the market just tanks, man.
Yeah.
In oil. You know, just intriguing how that plays out. But, you know, buy the rumor, sell the news, maybe, in terms of all the lead up is the fear. We're still at $70. It's not like we're at 55, right, where we can really see a spike. I mean, even with pulling out, maybe that's what's factored in. I mean, does oil have to be at $80 or $90 if we pull out? We were just at $27 a year and a half ago, or, you know, that's...
So picture this. This is the battle. Driving to work this morning, folks, I'm talking to myself about the oil market, right? So I'm saying, you know, because of the way it's set up technically, it's like, okay, it has a free range to that 75, because we've been talking about that's the lowest.
The higher from
now, that being said, exactly what you just said, I said, you know what, this could be, no matter what it is sell the news.
Yes.
You know,
definitely.
And what we do know is that this oil market likes to move around, and you know, so we're going to know soon enough, which is pretty cool.
And what'll be really interesting is if, you know, for anybody looking at these trades, you want to have quick fingers, because what's going to happen, I imagine, is that there's going to be some finesse that's said no matter what's said.
Yes.
This afternoon, as in, you know, that's not a one-word answer, as in we pull out or we don't. I mean, kind of like you were saying, maybe he says we push it back, and I don't think you can do that. But there might be some type of meandering.
A subtle deal.
Yeah, where the market says, okay, wait, was that a pullout or was that not, right?
Yeah,
Are we still in it or are we not?
Right.
You know, so that'll be the interesting part as to, you know, and is there a lead up to the actual announcement?
Yes.
As in when Trump begins speaking, is there a lead up to where that's, you can see the market trying to anticipate what's about to come?
If we go to the news right now, someone just came in, let's see, who just came in? So, and let's see, put that up. Someone just come, well, let's see who. It's all again. No, the top news just keeps popping up. But there was a either a big broker deal or someone else comes saying, okay, the bet is that this is going to happen. So we're going to get a lot of that going back and forth. You know,
sure, the speculation, as Kevin Hinks said. Here's where people are speculating.
Right, totally.
Yeah,
totally. Let's go look at IJR for one of our tigers out here. IJR. So what is this? Oh, I see small caps. Oh, the small caps. They want higher price. These small caps, folks, it looks to me like they want to go after the high, you know.
Can you just go back to the description for one more second? Because that said something about, it's not the Russell, though. It's the small cap 600 index.
Okay.
Just to put...
the fund's small cap 600.
S&P small cap 600. So it's an ETF. That's just, it's not a double, it's not a triple, it's not a inverse, it's just the S&P small cap 600.
Right.
Okay.
So, it'll be intriguing watching this. This is a good one to watch. You know, those highs up there, $80.68. And what we have had here, this would be amazing if I can't make the 80.57, because the market in general, folks, is set up like this, meaning that we have 3 to 4 lower highs. If we go back to the Russell for a second, this is the 2000. What you're going to see is that
Pretty similar formation.
It almost made the high yesterday, you know, but what the Russell did do, what the market did not do, is that started pushing with volume. I'll go to the IWM and you'll be able to see it clearer. So yesterday we did 16 million shares. You're going into 16 million, you know, and the rest of the indices, not that that's a lot, but the rest of the indices didn't even get close like that, meaning the Qs went higher, the SPY went higher. In all those cases, we do the Qs first, what you're going to see is that your volume dropped off dramatically, even though the Qs had price. So 32 million versus, versus 29. That's interesting, man. So the Qs did go into the swing point, but not into where it's coming into, which is 66 million. Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Dow right now up 1, NASDAQ down 2, S&P's off 1.5, gold down $5. Come right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. We got the Dow up 5, NASDAQ down 3, S&P's down 1, and we got our man, Mr. Dave White. When we're talking about defined risk, folks, Dave's going to be doing a great workshop. That workshop is going to be on May 16th. Option trading, their expiration.
That's right. A week from tomorrow. So we got options expiration next Friday, May 18th. Wednesday of, Dave's going to be in there with subscribers to either of his newsletters, Path of Least Resistance or the Tech Insider. Option trading near expiration, analyzing swing trades and those expiration day scenarios.
This is a beauty for folks, too, because I remember when Dave did this before.
Yeah, great workshop.
Yeah, big time.
I think it's been a couple years since he's done it.
It is. And it's a workshop, folks, which is so cool. He'll go through it. It's important that you really get it right now because he brings people up to it. So
he'll talk about in his newsletters,
exactly.
We're looking for this next week.
Right.
We're looking for this setup.
Right.
This stock could be a good opportunity come, Tuesday, Wednesday, Thursday of, because low premium, really low premium. What you're paying for that option. So he's going to be talking about all of that the Wednesday of. I encourage people, like I say, get in there now. New subscribers, comes with a 30-day money-back guarantee. First-time subscribers, 30 days, no questions asked. You get nothing to risk. You, of course, get his newsletter. You get the workshop. It will be archived, hour-long workshop Wednesday night. And what's sweet is, man, we got a lot of market action going on.
White
right?
lightning.
That's right.
You got to love it, man.
That's right.
Check it out right in the front page of TFNN, folks.
So checking back on oil just one more time, 69.84. And again, looking at these two contracts, just cool how they set up. We're now, again, 16 pennies away from that point. That'd be your bullish spread. That'd be your bearish. So, again, looking at about $75, $77 from $70. So you need...
And we started off at 74.
Yeah, it is pretty close. Pretty cool, man. We'll see what happens.
Stay right there, folks. Swim lessons coming up next. And, of course, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back, and Andy will be back.
Lots of good stuff to talk about. Thanks, man.
Wow! Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.